Good afternoon and welcome to Business Incorporated. I am Busi Namafaye. We're live to you from Channel's global headquarters in Lagos, Nigeria. Coming up on the program, Russia plans to stop its crude oil pricing in US dollars. Bank of Japan and the US Fed keep interest rates steady. Plus, more earnings coming in as PetroChina reports first quarterly loss since its IPO in the year 2000. Let's spend the next 30 minutes together, and we'll start with the two interest rate decisions on the street. U.S. Federal Reserve yesterday kept interest rate unchanged at 0.25% to 0.5%, and the accommodative monetary policy to support economic growth. Explaining the decision, the Fed chairman said the labor market has improved further despite slow economic growth in world's #1 economy, adding that the Fed is keeping a close eye on inflation while removing references to worries about the state of the global economy.
The Fed decided to raise benchmark interest rates by 25 basis points in December last year, the first interest rate increase since 2006, marking the end of an era of extraordinary easing monetary policy. Analysts had expected the Fed would raise the rates for 4 times in 2016. But Fed Chair Janet Yellen reiterated that future increases in interest rates will be data dependent, and the central bank will not follow any mechanical formula in the path of rate hikes.
Unfortunately, there are mixed economic signals still happening here in the U.S. right now, and so it is a challenge for them to have a clear path going forward, and that's why they keep making these statements where they say it's going to be very data-driven. They're going to continue to look at evidence and just before every decision. And with that in mind, they're still trying to figure out how much more the economy can grow before we're going to really see big inflation.
According to the latest data released by the United States Department of Labor, unemployment relief applicants dropped to 247,000 in the second week in April, a new low in the past 42 years, indicating the labor market has improved.
I do think that the labor market is really the key focus of the FOMC right now. In fact, when they raised interest rates for the first time in many years in December, it was really based on labor market information. What they're trying to convey with this sort of two-handed view of the economy is a recognition that the economy isn't at the wonderful strength we'd like it to be at. But at the same time, it is looking a lot stronger than it has looked in previous years, which still does justify thinking about a rate hike in the near future.
The Wall Street stocks edged up. The US dollar ended slightly lower, and the oil prices rose to the highest level of the year on Wednesday after the Federal Reserve signaled it was in no hurry to change policy.
And 24 hours after the U.S. Fed Janet Yellen decision, the Bank of Japan, that's the central bank, also kept its fingers off the interest rate button, expanding monetary policy or stimulus as the governor, Kuroda, and his colleagues opted to take more time to assess the impact of negative interest rates and inflation. The Bank of Japan kept interest rate unchanged despite coming under pressure to take further action. Japanese shares fell and the yen surged after those decisions. The Nikkei 225 finished higher 3.6%. In China, the mainland's Shanghai Composite fell 0.5%. The Hong Kong Hang Seng was flat at 21,384. In South Korea, the benchmark Kospi Index lost 0.75%.
マネタリーベースが年間約80兆円に相当するペースで増加するよう
At today's meeting, the majority have voted to maintain its pledge to increase base money at an annual pace of 80 trillion yen via aggressive asset purchases, with the understanding that developing nations will escape from its stagnant economies. Exports will gradually increase. This country's economy will gradually expand as the country's growth will exceed the potential growth rate.
The Japanese stock market finished negative today, 3.6%, and that's part of the actions rocking markets around the world today. So let's put it into some perspective. Let's cross over to Frankfurt Stock Exchange, where DWTV financial correspondent for Channel Television, Ulrich Bartz, is standing by to talk to us about these two key interest rates decisions. Fed on the left, the Bank of Japan on the right. Both of them, however, standing on the left side of the street when it comes to interest rate decision. Talk to us, Ulrich, bring us up to speed. How is the market treating this? We've seen some numbers already across the Asian markets. Talk to us about European trading day.
Yes, for Europe, I think the decision in Japan was not a major encumbrance. People looked at it, and I think everyone was surprised that the Japanese right now are putting their interest rate decisions or support measures for the economy on hold. I don't think that's affecting European trading really, but of course it'll make the next Bank of Japan meeting all the more interesting. Then I think the Europeans will keep a sharper eye on it to see what the trend there is in the world's third largest economy, which it is. The Fed, different story. People frustrated at what they heard from there. Not the fact that the Fed did not move. People ahead of the meeting didn't really expect that. They knew that the Fed was kind of conflicted, that there were some members of the FOMC, the Federal Open Market Committee, that makes the decisions in favor and some against moving on interest rates. I think the people here in the market share the analysis that we just heard, that the Fed is broadening its view a little, not just the labor market, but for example growth as well. Still frustration at the kind of communication, at the kind of message that they're sending. One analyst from the Commerzbank phrased it this way. She said, you know, this back and forth from the Fed is just nerve-wracking.
Interesting. But let's leave the monetary policy space and step into the corporate world and see what's going on. Volkswagen today, what was revealed at the annual meetings in Wolfsburg?
Yes, the presentation of the annual results in Wolfsburg showed that there were no new numbers as to 2015, but Matthias Müller, the new CEO, is sounding confident that he will show a profit this year. And the numbers he gave on sales for 2015 showed that there really wasn't all that much impact of Dieselgate, as one can call it, on the sales so far. Also remarked by traders here, the fact that Volkswagen has no plans yet to sell units, for example, the truck division, in order to garner money, in order to pay for costs for the scandal, for damage claims or for penalties imposed by governments. They did say, though, that they were ready to move if it became necessary. Now, that was a given when you listen to the people here in the market, but still it was said now in Wolfsburg, and that was an important message also for the market. Almost everyone here in the floor, at least that I've talked to here on the Frankfurt floor, is aghast at the way the people on the management board are treating their bonuses, the fact that they're ready to give up only a small part. Nobody has any understanding for that.
Well, a very surprising story, Ulrich, let's wrap it. One of the world's largest banks, one of the largest also in Europe, Deutsche Bank dodged the bullet, posted a surprising profit first quarter. Talk to us about this. Well, analysts had predicted a loss. How do you explain Deutsche Bank's earnings?
Yeah, a lot of puzzled looks here when people first had the message from the bank. 236 million profit in Q1. And remember, this quarter, it's not that far back that the financial market was in utter turmoil. It was the worst start to the year in decades. And of course, that was felt by banks especially. Felt by investors, but also felt by banks. Now, the Deutsche Bank felt that as well. Its investment banking arm lost 22% in revenues, so not a great start there. The profit against this backdrop, all the more surprising. It can be explained by the way the bank, let's say, adjusted the balance sheet for costs. It didn't put away as much for legal costs in the future as it did in the last year. That helped. Top managers were a little bit less demanding in terms of bonuses, less bonuses paid. That helped also.
Yeah, okay. We have a lot more to chew. Ulrich, well, let's hang it in there for today. Thank you very much. Ulrich Bartz from Frankfurt Stock Exchange, financial correspondent for DWTV, Channels Television there.